All right, good morning and welcome back to this New York session 2 for the day, for the week. It is the last session for the week as we also come to an end of the February series, and we should be looking up for March going forward. Uh, I think 3rd of March is going to be a big bottom. I think today should be a big bottom for euro, pound, and a top formation for the dollar index. Potentially, gold is approaching its major support as we speak. So that's why I brought up the gold chart first. Now, if you have been following since the last three sessions, we've we've sold gold uh, around 29.20, 29.30 with a stop around 29.59.50, 29.60, and the potential target expected was 29.41 and 28.40 and 28.18, which we are already seeing it hitting almost. Prices are dropped. They have dropped to 28.44 already, and I think it's only a matter of time before it drops towards 28.18 as well. So, in a nutshell, what gold is doing is minute wave 4. It is progressing in minute wave 4, and once it is complete, I think it's going to be better off towards minute wave 5 higher, which has been projected, which has already projected higher. There you go. Towards the 1 point, that's the 1.618 target, 1.32 and even higher. All right. So just wait for a bit more corrective drop. This drop is tentative. It looks like it's corrective. It's not a free fall or an impulse wave which is being carved right now. So be be a bit careful in aggressively selling. What you have sold is good enough. What we have sold is fine enough, and potential targets around 28.10 would be an absolute wonder. Right. So that's the story in gold. Let me flip the chart to a Euro USD soon enough. Just a moment as the charts are being hung. So Euro USD, let me just go back to the hourly chart. All right, so those who are just joining, it's not advisable just reviewing quickly. It's not advisable to go short right now. Excuse me, I need to have the power on for the laptop. Okay, so it's not really advisable to go short at this price. In fact, we should be booking profits partial now, and on a pullback we can re-enter on the short side, but 28.10, 28.20 is good to take profits. So, all right, so that is the story in the metal. In let's have a quick review of the coins so that we can go back to the currencies later on. What we were expecting in Bitcoin was has been already met, but look at the target around 78 already. So we'll have to wait for a corrective rally. I mean, it's not very conducive to go and buy right now because You never know, it is just wave 1, 2, 3, and there is wave 4 and 5 to be print. All right, and if that is the case, then it's better to sell on rallies. Now, the price action for price range for Bitcoin to be sold is going to come somewhere. I think if that is wave 3 complete, then we are going to see a potential wave 4 terminating somewhere around the 86,000 mark. Alright, so we'll wait for prices to rally towards the 86,000 mark and then probably turn lower from there towards the 67 and so on. But I think going long or building long positions in this at this point in time is absolutely ruled out, sir. Alright, so we'll have to just wait and watch, because the daily chart is kind of giving me a feeling, and the charts are we prices should ideally stay above uh, 62,000 for uh, the uptrend to continue, because if it drops to 61,000, that would be a confirmed bearish reversal, and bears have set completely in control. That would be an indication. All right, so we are watching wave 4 rally towards 86, 89,000, and then we turn lower from there. We take it over from there again. All right, Solana should be also on the same lines. In a nutshell, we are okay. Solana has resumed its corrective wave, corrective rally, which we were anticipating. So that is playing out with according to the plan. 5 waves down and a 3 wave corrective rally. So I think what we can do is uh, let Solana confirm an impulse. It's already carving an impulse right now. So let it complete an impulse, and then uh, it's almost taking out the first resistance out there. After that, we can expect a pullback somewhere around the 134 region. So we try and enter on the long side, even though it's an aggressive call, we try and enter on the long side at 134 with a stop around 125, and then try and take it over towards 192 and 210. This could be a safe strategy, at least safer in the sense that we are buying the counter trend after a 5 wave rally and a corrective pullback. All right, so that would be much safer. All right, so just hang in there for a while, please, before we commit on the long side for Solana, at least for Solana. But please remember, this is a counter trend rally that we are trying to capture, so it does carry some risk, but the risk we'll try and minimize actually. We don't want to commit anything around here, around the current price, but we'll try and minimize towards 134 levels or so. All right. All right. So that is the story in the coins. We are sidelines. We are on the sidelines for now. Would like to remain on the sidelines. Possibly during the weekend, we'll have a look again. All right, sir. Let's bring up the Euro USDs and the dollar indexes and the GBP USD. So nothing sort of changes. The structure remains the same. The only thing that we are now counting on is that a minute wave 1 is complete. Not only that, on the 3rd of February, that was a bottom again, 3rd of Feb, and we are now 28th of Feb. It could be a bottom again, all right? It could be just a repeat of the story. That's it. But then the intensity is going to be much higher going forward in March, because that will be wave 3 actually, the third wave. And if the third wave is also extending, as I see that the lower degree extensions are being carved out, if wave 3 is extending at a couple of degrees or 3 degrees, then March is going to be an amazing rally for Euro USD, Euro bulls actually. All right, so it's good to remain on the long side trading point of view with a stop loss around 1.0200. All right, and potential short-term target is 1.075, 750, and 1100 going forward. So that would be the case in the Euro USD. I think we are extending. Euro is extending. Could be one of wave two of three, and then again one of two, and two of two. So the third wave is kind of extending as well. So you see, this could be one, two, three, four, five. That could be wave three of minute three. So we'll have again minute wave, wave four and wave five before that minute wave three completes. You know what I'm trying to say? It's going to be much ahead than what we are thinking. By the time these five waves complete, brothers, I think we would be above 1100. Easy. I think we'll be more than 1100. We'll be possibly towards the 1200 and 1300 zone. And it would also be not a bad idea to change this degree to a minor wave 1 and wave 2. I think we'll do that on a Monday once the third wave begins to rally. All right. So that's the story in the Euro USD. Now maybe we'll flip the focus to the dollar index. Just in a while, please. So we've got the dollar index 8 cap chart in front of us. And again, prices are not, I would say, they are stalling in the sense that 107.20, 30, 107.50 was a good price where we would actually recommend short positions to be taken, and that's what is being seen right now. Uh, so if you're just joining by any chance, we already recommended not to wait in the past two sessions, both the London and the Tokyo, specifically the London overlap, not the Tokyo Sydney overlap, but the London, to to hold to be hold on the short side, please. Somewhere around 107.20, and the stop loss would go around 109.85. That's just because if you're trading with 8 cap, if you're trading with capital.com, the stop loss would go around a little lower than 109.85, to be around 109.45. So all right, so that is the story in the dollar index. I tell you what, if the third wave, if the third wave is extending as we discussed in the Euro USD, we are set up for a good, meaningful reversal in March. Remember, brothers, we've been again and again, over and over and over again. That was the 3rd February high, beginning of the new series. Prices never rallied above that. This is 28th of February, just around beginning of a new series. Prices might not be traveling or hitting anywhere above that high. Maybe a 3rd of March or 4th of March, one or two minor highs, but that should be it. We should be comfortably lower below 107.50 for the rest of the March series. I mean, not the rest of the March series, for the entire March series actually. All right, so that is the story for the dollar index. We can pick up pound. And there you are. Pound is, as I keep on saying, pound looks to be much stronger than what we have seen in the euros and the dollar index. I would not say that euro and dollar index are weak by any degree, but the strength in pound is quite a bit maintained. You can see that shallow wave or shallow corrective wave barely testing the 38.2% retracement. All right, so when you see that happening, uh, such shallow retracements, that itself is an indication that bulls are absolutely in control. So trading point of view, there is no need to please wait for an optimum entry around the 25s or even lower. It is good to enter on the long side right around the same price, 1.26, and the stop loss could go around 1.2250. I mean, placing a stop anything above that would be inviting risk actually. So stop loss is good to remain at 1.2250, and the take profits would go around 28 and 1.3 and 1.32 respectively. All right. So those are the stories. Let me have a look at dollar in the gold actually. All right. So the story in gold remains absolutely unchanged actually. It is broken below the 40 handle, and now it's just about a matter of time before it reaches 2818. And you never know. We'll have to review, but at least for the sake of booking profits, for the sake of respecting what the Fibonacci ratios are indicating, please book all your cover all your short positions around the 2838 mark. You can see there should be some kind of a bullish divergence already. I can see that bullish divergence already. All right, so please remain on the short side for now, but refrain from holding short positions if prices manage to reach 2818 anytime soon. All right, so that's the story in gold. We may take a look at the Dow Jones now. Tell you what, sir, Dow Jones has it looks like a five-wave decline, isn't it? And that five-wave decline could be wave one of a lower degree of wave three, or wave 3 itself. If it is wave 3, then we are going towards wave 4. But tell you what, looking at the degree of decline, it is minute wave 1 followed by minute wave 2, and then minute wave 1, triangle minute wave 2. This could be just wave 1 of the minute wave 3, which is much, much, much lower. So if at all there is a pullback, that could be wave 2, and then 3, 4, 5 before minute wave 3 actually completes. All right, so much lower levels are to be seen or witnessed in the Dow Jones. So kindly remain short. I mean, you can take partial shorts right now, maybe some more short positions around the 43,900, 44,000 mark. But tell you what, 41,000 and 37,000 remain the near-term or mid-term targets for the Dow Jones. All right. SPX 500 is also on the same lines, and it's also completed the initial drop around 58.50. It's just about matter of time before it begins to cut loose on the north side, or it just wants to pierce that 58.50. Maybe it can do it today intraday as it did yesterday. Remember, just after this New York session 2, prices declined, and that could still be the same story today as well. So watch out for a reversal of, sorry, watch out for a drop towards 5800 possibly, another 70 points lower from here by the time the session closes or the day ends today. So if that happens, then we are nicely poised for a pullback rally coming Monday. All right. And we might also want to take some profits. We'll issue some take profits on the portal for Dow Jones, but we haven't issued a trade for SPX. Actually, we've done that for Nasdaq. So maybe we'll issue some take profits for Nasdaq if possible. I think we are already down. I don't remember exactly, but price was something around the 21,000 mark, and it's already breaking the low. So maybe we can take some profits off the desk, the Nasdaq, and wait for a three-way corrective rally before it breaks lower again. I think just after this session, what I'll do is I'll book some profits, at least in the Nasdaq. We'll allow Dow Jones to run as it is, and SPX 500 we'll go and sell on a corrective wave higher. Finally, we have not revisited or we've not visited the VIX. All right, now the VIX, if you were there with me in the VIX, we've been contemplating a triangle consolidation. Lows were not being breached, so the triangle consolidation was held nicely, and it was projected higher, and now we have seen that five-wave move higher. See that wave 1 expanded, wave 2, and then 3, wave 4, and wave 5. So I think we are also done on the VIX. I think we can project a corrective decline in VIX next week over 1755, and the next target for VIX would be it should be easily above the 21 mark. So the first one is 26 and second one is 33 going forward. All right, so those are the stories as we move into the last trading session of the week, and let's bring the current one to a pause, and we'll be back again at Sydney Tokyo overlap Sunday 7 p.m. Eastern. And if there is any extra session to be taken for crypto during the weekend, we'll keep you informed of that. At least for now, until the next session. Once again, thank you for being here, and please do take care and God bless. Goodbye.